I'm in London with Ben Dyson from Positive Money, and we're going to have a little chat about the banking system and what Positive Money have been doing to try and make a change. Well, let's start off with who Positive Money is.
We're a not-for-profit campaign, and we work on trying to fix the banking and monetary system. So the big problem with money is if I ask you where does money come from, if I ask most people in the street, they would say, well, it all comes from the Bank of England. But actually that's just a small percentage of all the money that exists. It's actually just 3% of money comes from the Bank of England. So where does the other 97% come from? Well, the way the system works today means that 97% of all the money that exists is actually created by banks, and it's created by banks when they make loans. So when you walk into a bank to take out a mortgage, that money isn't coming from somebody's life savings. It's actually just new money that's basically created out of nothing through the accounting that banks use when they make loans. And what that means is almost all of our money is created when somebody goes into debt.
Excellent. So that's something I've tried to explain to people before about money's effectively it's not real. It's just the mortgage is a good example. Two people turn up at a table with nothing, and you walk out with a loan for a house that didn't exist before. So in the system that we've got at the minute, how does the debt ever get paid back?
Well, what tends to happen, so if you think almost all of the money is created when people go into debt, if you want to get more money into the economy, you have to get people to go further into debt. If people say, actually, we have too much debt and it's time to pay some of that debt down, then the reverse process happens and money actually disappears from the economy. So you have a system where we rely on people getting constantly further into debt, and that's why the financial crisis was caused by people being in too much debt, and the government policy since then has been to encourage further bank lending and further debt. So they're using the cause of the crisis as though it's a solution to the recession.
Yeah, because obviously recently we've seen the new government loan scheme for home buyers, and there's been a lot of it in the press about the payday lenders, and so you're saying that push for basically getting us more into debt is like a Trojan horse to make a bigger bubble later on to go bang, or?
Well, it's it's a way of getting more money into the economy, but in the end it's going to probably lead to another financial crisis. I mean, the level of debt didn't really fall since the crisis. It was already too high then, and now what is happening now is that level of private sort of household and family debt is going up again because of government policy and things like the Help to Buy scheme. So if you just keep piling more debt onto households and individuals, eventually that debt becomes unrepayable and we have another crisis. And we've been talking about this risk for a few years now, but recently the head of the Financial Services Authority, the former head of the FSA, has come out and said the same sort of thing, that if we continue just piling on more debt, ultimately that could lead to another financial crisis.
George Osborne's just done his autumn statement, and he made the statement that the recovery's over, basically. He's saying that we're in the recession's over, and we're into recovery. So, I mean, when I look around and you look in the streets and you see that most people that are actually in poverty are people that have jobs, and there's a record level of child poverty in this country. How can he be saying that we're in a recovery when those statistics are going up on a monthly basis?
Well, that's the thing. It's the recovery again is fueled by debt. It's fueled by people borrowing and spending, and generally people don't go into debt unless they need to. So actually, if that's happening, it's more a sign that people are struggling rather than that the economy is getting better. And there's been surveys that have come out that show that the majority of people, about 70% of people, are not really feeling any benefit from this sort of economic recovery. So a lot of the benefit is going to, I guess, the financial sector again. All the interest that's paid on this debt is going back to the financial sector. And yeah, it doesn't benefit the majority of people. House prices are going up again, which is making the cost of living even higher.
So one of the things that is discussed is that austerity isn't bad for everyone. So we've seen bankers' bonuses are back. How do you think we can? I mean, what have positive money been doing with regards to creating a change with, or proposing change to what we've got at the minute with the banking system and the financial sector?
The way the government dealt with the crisis and the recession was completely the wrong way. What they could have done that would have made a massive difference very quickly was to have the Bank of England create new money and have that money spent into the economy by the government. Now, whenever you talk about the Bank of England creating new money, people think that's sort of, you know, a dangerous policy, but you have to remember that new money is created every time anybody takes out a loan from a bank. But when banks create money, they put most of it into property bubbles and the financial markets. When the Bank of England creates money, what it can do that the government can't do is get it directly into, that the banks can't do, is get it directly into the real economy without increasing the level of personal and household debt. So what we would have, recommended as a way of dealing with the recession and getting things back where they should be again, is for the Bank of England to create money, transfer it to the government, and then just spend that money into the real economy so it ends up in people's pockets, and then they can spend it again, or they can use it to pay down their existing debts. And that would actually help real people, whereas what has been done with sort of inflating the property bubble is that's making the cost of living higher. The other policy that they use, quantitative easing, in that the Bank of England created £375 billion of new money, but instead of putting it into the real economy, they put it directly into the financial markets. And it's not really trickled down from the financial markets to the real economy, it's just stuck there. So that's given a massive boost to the richest 5% of the population, who are now probably about, it's been calculated that they've benefited by about £120,000 per household in the top 5%, as a result of quantitative easing pushing up the prices of stock markets and bond markets. But the majority of people haven't really benefited at all.
Okay, so every time someone like Mervyn King or now Mark Carney says the Bank of England is going to go and print a load more money for quantitative easing, no one on the ground is seeing any benefit from that. It's just hundreds of thousands of pounds.
Financial markets, but that kind of flooding the financial markets doesn't help people in in the real economy, in the high street.
So, one of the things that's going on currently at the minute is the plundering of the public sector. We've got the NHS being sold off. A lot of the fire and rescue services are going through phased privatisation. Again, this is all being done under the cloak of austerity and the fact that we've got this deficit and we need to pay it off. And the government is saying that the public sector is too big. We need to bring it down and bring it in line. Do you think that the cloak of austerity is being used to do that, or do you think there is genuine concern with the size of the public sector and the way it's operating at the minute?
Well, I think again, all the policies that they've used since the crisis have been the wrong ones. If what you want is to reduce the size of the deficit, the best thing is to get economic growth going again. And the best way to do that would have been to get new money into the real economy. So they were kind of stuck in this mindset where they're stuck in the old paradigm, really, and they went for what they thought would work, and obviously it hasn't worked. What we've got now is we've got more expensive housing, more personal debt than we've ever had, and we're actually in a more dangerous position than we were 6 or 7 years ago. So there's completely different ways of doing it, and the policies that have been used have been pretty ineffective.
So who do you think we can work with then to try and get these different policies on the table and on the agenda to, because at the minute the public are kind of sleepwalking into believing that the recession's over and that the plan's working because house prices are going up and they've been given all this extra debt. How can we get that information on a more mainstream agenda, I guess?
What we're focusing on at the moment is getting the general public to understand how money is created and how the monetary system works. and how it affects things like debt and house prices and inequality. The other thing we're doing is focusing on getting the press to report accurately on how the system works. So, ever since the crisis, you've had millions of words written about how, what went wrong, but almost none of those journalists have actually written about where money comes from in the first place. So we're doing a lot of work now to get them to understand, how money is created and how it actually affects the whole economy, and why there needs to be change. And it is, starting to happen. There are journalists now who are starting to question the way the system works and if there's not a better way to do it.
Right, so you're starting to get some traction with the journalists then, because you tend to see just the same kind of rhetoric being rolled out by the, don't want to name names, but certain media establishments that just rolling out the party line, and it's just wondering how we can get more pressure on them to start asking more questions effectively, because they're just kind of repeating the same spiel.
Yeah, but I mean there is some good signs. So for example, the rising house prices, when that started again, earlier, I guess it was about 12 months ago, I was worried that the newspapers were just going to go back to their old story of everybody should invest in property because prices are going to keep going up at 10% a year. And actually there's been a lot more questioning of whether that's a good thing. Whether we've got some of the most expensive housing in Europe, is it a good thing to be pushing the cost of housing up again? And a lot of the kind of industry people, even the British Bankers Association, have been saying that this policy from the government to encourage further house lending could be dangerous if it's not stopped at the appropriate time. I mean, we would say it's dangerous anyway, but so there's some positive signs, but there's still a lot more work to do to get journalists and to get the press to accurately report on the kind of things that need to change in the system.
Okay, well, I mean, it has been refreshing to see some of the press starting to change their tune a little bit, but I mean, do you think that we can get more pressure on politicians? Because obviously at the minute we've got both sides of the house kind of going along the same lines. Have you kind of picked up any traction with any particular politicians that are starting to look at things differently, or they're pretty locked into the same mode of thinking? Well,
to be honest, I mean, what we've picked up over the last few years of trying to get this issue out there is that politicians really respond to A, their constituents, and B, what's in the press and the wider discussion. So if you can get kind of the public movement and the press to be involved in sort of this whole debate, that's when politicians become interested. There's a lot of problems with the political system and things like the party whips and everything, and people towing the party line, and that makes it quite difficult at the moment to get sort of real changes through there. And that's why we focus on the outside pressure from the press and the public.
Right. Yeah, I think that's a key thing, getting the public engaged and actually trying to get them to understand first what's going on, and getting them engaged to put pressure on the press, pressure on the politicians, and get that kind of simultaneous divergence on them to try and start making some changes on what we've got going on at the minute.
Yeah.
Okay, well, I'd like to thank you for your time, and thank you for the work you've been doing with Positive Money. And Thanks. If there's anything we can do to help, then let us know and we'll do that.
Brilliant.
This is We Say People Not Banks, and this was Ben Dyson from Positive Money.